We have one of the original license holders in the country of Canada. I'm very excited to bring on a good friend of Benzinga, John Arbuthnot, Delta 9 Cannabis co-founder and president and chairman. How are you?
Elliot, I'm very well. Thank you as always for having me.
Yeah, of course, my friend. I'm going to let you get right to it. We can hop back on for Q&A here in a little bit, but hit us with a little knowledge bomb, my friend.
Thank you, and good morning, everyone. Welcome to the Benzinga Cannabis Conference. My name is John Arbuthnot. I'm the CEO, co-founder of Delta 9 Cannabis. Going to lead you through the company's history today, chat a little bit about our positioning in the Canadian space. We don't necessarily use a slide deck, so we'll keep this a little bit less formal, run through the company's history, our points of differentiation, why we feel now is an attractive time to become a shareholder in Delta 9. Before we begin, I do want to remind everyone that today's presentation will contain forward-looking statements that reflect the company's views toward future events. Any such statements are subject to risks and uncertainties, which could cause those results to differ materially from the forward-looking statements. For more information on risks and forward-looking statements, please refer to our public filings on SEDAR and our company's website. And with the legal out of the way, let's begin. As Elliot mentioned, Delta 9 is one of Canada's oldest cannabis companies with over 7 years operating experience. Founded back in 2012, 2013, we became the fourth licensed commercial operator in Canada under the Health Canada MMPR program. Now, the early years of the company were quite modest as a small, privately held licensed producer, producing medical cannabis products, distributing those to patients with a medical authorization through the mail order program. 2017 became the real growth year for us. We raised about $10 million throughout the year, listed our shares on the Toronto Venture Exchange in November 2017. Since that time, we've raised about $85 million through a mix of debt and equity to fund the expansion of our various businesses. We now are one of the few vertically integrated and diversified cannabis companies in the country. We're licensed by Health Canada for cultivation, processing, extraction, and wholesale distribution across 6 Canadian provinces. We're a licensed retailer, currently operating 12 bricks and mortar cannabis retail stores, as well as direct-to-consumer online sales through our online platform, and continuing to expand that chain of stores across the prairie provinces here in Canada. And we operate a business-to-business segment where we sell our proprietary cultivation platform. We provide consulting and licensing services to other cannabis licensed and pre-licensed businesses, and we sell cannabis genetics. The company's shares now trade on the main board Toronto Stock Exchange under the symbol DN, and we trade over the counter on the OTCQX exchange under the symbol DLTNF. Now, on the cultivation side of the business, what really makes us unique is how we grow, as opposed to big open warehouse or greenhouse or outdoor operations used by many of our competitors. Our proprietary cultivation methodology is built around a modular, scalable, stackable production unit that we call the Grow Pod. Now, we feel this indoor, relatively small scale cultivation methodology carries a number of benefits versus big open grow spaces. It gives us a very high level of control over the growing environment, allowing us to dial in those factors that most directly contribute to product quality. So temperature, humidity, light intensity, CO2 saturation, all of that dialed in very precisely and leading us to higher quality output products. The grow pods are relatively inexpensive. Given we manufacture them ourselves, they provide a very attractive return on invested capital. We customize these growing environments for each genetic strain of cannabis that we grow, maximizing yield and potency. And the modular format, you have to remember, minimizes the risk of contamination, spread of contamination throughout these facilities. This is an agricultural crop. We really mitigate risk by putting it into these small, highly controlled indoor growing environments. Companies scaled our operations significantly over the last few years. Our licensed grow pods here on our site, 297 of those currently licensed and in operation in our state-of-the-art cultivation facilities. Now, beyond the operational benefits, there's obviously an economic case for these pods. As I mentioned, we are manufacturing them ourselves. There's a very attractive return on invested capital for these grow pods. We're typically expanding our operations for under $100 per square foot. This compares with conventional or purpose-built facilities, which can range upwards of $300 per square foot. So relatively inexpensive from a CapEx perspective, again, leading to better return on invested capital. Our operations have scaled again significantly over the last few years. We've invested heavily in automation of key processes. We also have relatively cheap input costs given our positioning here in Canada for things like electricity and labor inputs. We now have our per gram production costs down to only 60 cents per gram as of Q1 this year. So putting us in the low cost category in terms of manufacturing efficiency, but again, producing higher quality, higher potency output products. So positioned very competitively in terms of how we manufacture, how we cultivate our cannabis products. From a scale perspective, again, 297 grow pods under license as a part of our phase 1 and phase 2 facilities. This represents about 95,000 square feet of flowering canopy on multiple floors of production in our 80,000 square foot facility. Our capacity right now is about 8,325 kilos per year, or between $25 and $30 million in today's cannabis wholesale market. Our site here in Winnipeg, Manitoba is comprised of 47 acres of land, giving us a huge area to continue to expand our operations as the global cannabis industry continues to expand. We're now working on expansion of our Health Canada license perimeter from that 80,000 square foot current floor plate under license to up to 135,000 square feet. New purpose-built vault and distribution space has already been built out and is pending licensing. And some efficiency gains that we are investing in our existing facilities will bring our cultivation capacity up to approximately 12,000 kilos per year over the next few years. That would be up to approximately $45 million in today's cannabis wholesale market here in Canada. Over the long term, we, of course, will continue to bring on supply capacity as the Canadian market, the global market continue to expand. Again, ample opportunity for the company to expand as the industry dictates. Now, in terms of our product offering, Delta 9 currently offers about 30 different SKUs of dried flower, making up the majority of our portfolio. We also offer cannabis pre-rolls, ingestible oils, cannabis vape products, and a limited line of cannabis concentrates, and several SKUs of 2.0 products currently in development. A lot of excitement in the Canadian cannabis space around the introduction of derivative and 2.0 cannabis products over the last 12 to 15 months. But we have to remember that over 60% market share in the Canadian space is still comprised of dried flower and pre-rolls. So a lot of our company's focus is making sure that our portfolio of cannabis products is really meeting the value proposition for consumers in the flower and pre-roll space. A lot of our production pivot over the last 12 months has been towards higher quality, higher potency products, which are in very high demand from the end consumer. We have a genetic seed bank on site of over 75 unique cannabis genetics. This gives us a huge pipeline of products that we can continue to bring to market, continue to remain interesting and relevant for consumers that are seeking quality and potency. In 2020, we also launched a number of value SKUs in kind of the mid-range potency segment to compete with value offerings from a number of our competitors and position from a pricing perspective to be competitive with black market. It's not uncommon now to see Delta 9 products available in retail for between $4 and $5 a gram. Again, now positioning us to be not only competitive versus our legal market competitors, but also competitive with black market. Pre-rolls have become an increasingly important category in the Canadian space. A lot of consumers liking the convenience in small packaging sizes and also in a pre-rolled cannabis setting. Company currently has 4 different SKUs of cannabis pre-rolls. We have produced in our history over 1 million cannabis pre-rolls and brought those through to market. We are investing in automation of our pre-rolls line now, which will increase our supply capacity for pre-rolls across our respective provincial markets. Again, on 2.0 cannabis products, the company currently selling Delta 9 branded ingestible oils. We will be expanding that portfolio over this year to include new product formulations. We will be relaunching the company's vape SKUs, 3 different SKUs and formulations of vaporizers in 510 cartridges to be hitting the market this year. We currently offer cannabis kief and we'll be expanding that line to increase our portfolio of cannabis concentrates throughout this year. We obviously believe that these 2.0 derivative products will become an increasingly important category into the future. We are obviously offering the full scope of these products from Canada's leading manufacturers through our retail chain, which gives us live data, feedback, analytics on what's working, what's not working in these 2.0 products, allowing us to then better invest in our wholesale and manufacturing segments to bring these products to market. From a distribution standpoint, the company's added distribution markets incrementally as we've expanded our overall capacity. We're now in 6 Canadian provinces, all of the Western provinces, Manitoba, Saskatchewan, Alberta, British Columbia, as well as Ontario and Newfoundland and Labrador. This gives us access to upwards of 25 million potential Canadian consumers across these markets as we now span coast to coast from a distribution standpoint. We very much like vertical integration, very bullish on the retail segments here in Canada. We opened our first Delta 9 branded cannabis store on October 17th, 2018. That was legalization day here in Canada to lineups around the block. We now operate 12 Delta 9 branded retail stores across Manitoba, Saskatchewan, and Alberta markets. We like vertical integration for a number of reasons. It gives us control over the sales force, the bud tenders who are driving a lot of the purchasing decisions for consumers. Gives us control over distribution, control over marketing and branding, and advertising initiatives. We are very limited on how we can market and advertise ourselves here in Canada. So giving us a method to advertise right to the end consumer obviously becomes quite important. Also gives us live feedback, data, and analytics. Again, we're able to keep our finger on the pulse on consumer and product trends, pricing strategies from our competitors, make us a better vertically integrated cannabis company from our manufacturing side by having access to retail. Our stores have produced significant economics. We often produce revenue per square foot, revenue per store, well in excess of our large retail competitors. We continue to build out a chain of dozens of Delta 9 branded retail stores across those provinces that allow for vertical integration over the years to come. In our business-to-business segment, you'll see we drive a portion of our revenue from sales of our proprietary growing platform, sales of cannabis equipment, providing consulting and licensing services to other cannabis businesses. So we provide standard operating procedures, sanitation programs. Really, we provide a turnkey platform for cannabis industry entrepreneurs looking to get into the space, to get licensed to expand their own platform within the industry. This gives us a number of benefits for the company, gives us diversified revenue into the picks and shovels side of the industry, high margin business segment, again, to diversify our revenue and margin strategy, third-party validation of our cultivation platform, and valuable partnerships with these other businesses that are expanding across North America. I think it's very important to note that this B2B segment provides investors with diversified exposure to the picks and shovels side of the industry. I think most notably, this is a business segment that we can push into the United States. So we are prohibited as a TSX listed company to conduct plant touching activities in the US, but this ancillary products businesses, the infrastructure business, does allow us to participate in the near-term upside in the US market. We successfully built out facilities in Michigan and Maine last year. We've now hired a dedicated US sales force that is specifically targeting US states that are in expansion mode and look to capitalize on the upside prior to and in the wake of what we hope is federal legalization of cannabis south of the border in the United States. Turning to our financials, you'll see our most recent financials demonstrate the company, has a laser focus on execution and is contributing significant growth to top line. We have produced significant revenue growth in each year since listing our shares publicly. Revenues have grown from less than $1 million in 2017 to $7.6 million the next year, over $32 million in 2019, over $52 million last year in 2020. That's an increase of over 5,000% from the time we listed our shares through 2020, making us one of Canada's fastest growing companies. From a segmentation standpoint, on our $52 million in revenue last year, we produced $32.2 million from retail. That was up 110% year over year. Our wholesale segment was $11.8 million, up 24%. And our B2B revenues were $8.6 million, up 38% year over year. Gross profit was up 105% to $17.8 million last year. And I think most notably, company achieved $3.8 million in positive adjusted EBITDA, $1.5 million in operating cash flows last year. One of the few Canadian cannabis operators that has produced positive cash flows from operations in its history. Q1 this year, we took a little step back versus the sequential quarter Q4 last year due to industry headwinds, seasonal decline in retail, and a miss in our B2B segment, with revenues coming in at $13.2 million. I do want to encourage investors to look forward to our Q2 guidance, which will come out in the next 30 to 45 days. I think there's a significant amount of growth to expect here into Q2 and into the back part of 2021 as the overall Canadian market and Delta 9 continue to expand on the revenue side. On the balance sheet, we've maintained a strong balance sheet, over $23 million in working capital at year end, over $8 million in cash. Cap table is very tight. So only about 100 million shares outstanding, gives us a market capitalization right now of about 50 million. Company's currently trading about 1 times trailing 12-month revenue versus our peer comps that traditionally trade quite a bit higher than that. Obviously, significant opportunity here for investors that are seeking value in the cannabis space. Just wrap things up with, why to invest in Delta 9. I mean, our businesses have been declared essential through COVID. That kind of de-risks the investment strategy through some of the uncertainty in the global pandemic. We have a significant track record for success. Our execution, diversified growth strategy has spoken for itself. Investment from management, we're highly invested. We own about 40% of the company's equity. Path to profitability. Investors are increasingly seeking profitability in the cannabis space. We showed $3.8 million in adjusted EBITDA last year. Again, one of the few Canadian cannabis companies that can speak to that. As always, I would encourage investors to conduct their own due diligence. All of our Delta 9 investor materials, including most recent financials, MD&A documents, investor presentations, etc., all available on our website at invest.delta9.ca. Check out our main website at just delta9.ca, give you a look and feel of our retail business, the products and services that we offer. As always, please don't hesitate to reach out to our investor relations folks with any questions you might have. With that, I want to thank everyone for joining us today, and we'll flip things back over to Elliot for any questions we might have.
John, thank you so much for being here, man. Always love getting updates from you. I didn't really have all those numbers in my head, from the time of your listing to now. That's incredible. It truly is.
Looking through the Canadian Globe and Mail, list of fastest growing companies in Canada, you see kind of the top 10 companies reaching that 5,000% or so plus in 3-year revenue growth. And Delta 9 now, entering that territory, one of the fastest growing companies in the country here in Canada. So, I think that speaks to that track record for execution, and something investors should look forward to is us continuing to perform on that expansion strategy.
I'll grab your advice while I have you here. Yesterday, I got to moderate a fireside with a gentleman. We discussed vertical integration and the future of it in the U.S. And I'd love to kind of have you add on your insights as to the value of vertical integration in Canada, if you wouldn't.
It's interesting. You see a lot of CPG-focused CEOs really take the opposite approach, that, they want to own brands, they want to own products, but they don't necessarily care about the cultivation or the distribution side of the industry. We've taken the very opposite approach that, we want to control cultivation, processing, distribution, and retail. I think the cannabis industry is a different beast than what a lot of CPG-focused companies are used to. It's a new industry. Distribution is not as established. We do not have national chains of retail or e-commerce giants often to be pushing distribution of our products. Quality control is very important. So being able to actually manufacture these products, be engaged in the product development components as well as the processing and distribution, I think is very important. And what I've seen, the largest benefit is being tapped into the end consumer. At the end of the day, the consumers are going to decide who the winners are in the cannabis space. If we can operate a chain of stores across the country where we're processing millions of transactions a year, that's millions of data points that we are getting from consumers telling us which products are they liking, how should we be pricing our products, what should we be manufacturing, how can we provide value to the end consumer. Ultimately, that's going to translate into a winning strategy and translate into returns for investors.
I love it when you say data. Like, not you, but like anybody who says data in this industry, I feel like that's the key word for investors to go. Excuse me? Data. I love it. John, thank you so much for being here, my friend. Always great to get updates. We should see you live in October, I think, October 13th and 14th. We'll hopefully be able to talk about some more milestones with you.
Finally looking forward to an in-person, yes, as it starts to wind down here, Elliot. But thank you as always for having me. Great conference. Always a pleasure.
Thanks, John. Appreciate it. We'll talk to you soon, my friend.